Marius, good to see you in our office in Riga.
Very good to be here to visit Scandagra Latvian colleagues here.
And we want to use this opportunity as you come here and a bit talk about 1 billion question. This question is very relevant for all of us in industry. And day by day, we have this question from our farmers, from our customers. What is the best time when to fix the grain prices? Or what will be the grain prices? Is it right time to fix the grain prices? And I think you are the person who knows the backstage of all this kitchen very, very well. And this is the aim for today, to talk with you about, very shortly about the things. But for the beginning, maybe Marius, couple of words about you in Scandagra, about your background. So our customers, some of them are very aware of you, but give for your introduction, please.
So working in Scandagra Group more than 10 years, every day solving this question, $1 billion question, what's going to happen with the exchange. So I think we can briefly go the key trends, what is mainly now in the market.
And usually now it's a question about the exchange, about what is the price level, but we talk that this is the main thing, but it consists of different fundamentals. And today aim is very shortly to cover those fundamentals. What is the situation? How those fundamentals makes this exchange what we see today.
Okay, we can briefly go through. So let's start first about the exchange itself. I would say in the short term, we're still trading some kind of geopolitics right now. Fundamentals are really a little bit away now from the market. We have very kind of severe conflict in the Middle East. We have some spillover effect on our exchange. It's, as I say, it's how long it will last. If it would take 2 weeks, something, when the effect could be very mild, short, like last year during the 12 days war, when just the market spiked up like to 15 euros. Now we are going to very long escalation, long conflict. The effect on the exchange will already visible. We added like 25 euros since the conflict started. The peaks were around 2 to 5 euros for the new crop. Now the hopes and expectations are like this conflict may be resolved in near term. So we're a little bit cooled off on the exchange, but it doesn't mean, again, both scenarios still possible. That if escalation will continue, will continue in a bigger scale, the exchange could even further climb. But if moving to some resolutions or some decisions to end it, like US is like willing to do, to be honest. So when the exchange could a little bit retrace backwards, and we potentially could back to the fundamentals trading, which is still, again, if we speak about last season, we need to respect how much of grains, wheat, or also we have grown worldwide is the record high output, more than 840 million tons of wheat. Consumption also increased, but not at the same pace. We have the consumption around 824 million tons. So what does it mean? It means that we are just building the stock carryover, and we can see on the slides, on the pictures, that we are at extremely levels of the carryover, and we need some time to eat it. And then this carryover mainly is laying in those core regions like US, Russia, Europe, where it's the main regions which are basically driving the prices.
How you see how much time it's needed to eat those stocks from year-on-year experience?
Depends on the upcoming season. If we have some issues in upcoming season, it could be eaten in a very short period, to be honest. But if everything is going smoothly with the upcoming season again, so we need some increase of the demand, and demand is showing some kind of strength. Again, you can see on the slide that since the late autumn, the demand and trade in wheat, if we are counting the last 12 months, has increased, and it was the main trigger for the prices on the exchange to start to increase. But again, it's very related with the current escalation. those key buyers are the most influenced by this situation, and their economies may suffer. And already we can see that in late February, March, the traded volumes a little bit start to drop. So it's also a little bit could be the risk for the current trend. So again, this carryover could be eaten pretty fast if we have demand there. But the demand, it's also, I would say, in regards of this conflict, could be a little bit under the risk. So again, it's more now discussion about the new crop. And if we speak about weather and the situation on the fields, I would say that what is the core right now is the Northern Hemisphere and the fields there. I would say very hard to find any place where we have some issues. In Europe, we have very good winter, I would say, and then a pretty favorable start of the spring. Russia also benefiting from good conditions. Where a little bit there are some issues. It's mainly U.S., Kansas, a little bit too dry there, but some rains are also coming there, so also the situation could improve. So in the short term, in this early stage of the spring, all okay. Most sensitive period when we speak about weather, we usually speaking about like May, like even beginning of June. The most critical events may happen there. Some dryness in some critical region may affect the crop. Also, what is for sure will pop up to the headlines, and what is not like little bit in big scale discussed right now is the El Nino pattern. We start to analyze this pattern because the current probability to see it in late autumn is very high, close to 80%, and once it will pop up, or it will be more clear that it's there, it could for sure affect some deviations in some certain regions. Mainly, again, Australia wheat. Usually, we have seen like 40%, 30% lower output of wheat if we have El Nino in Australia. In Asia, maybe it will be more like more impact to the palm oil, more impact to the rice situation, but not so very applicable to wheat. In US, it's neutral, but also Latin America depends, because if now what is then the predictions, it's super El Nino. If we have super El Nino, so then it means that even the Latin America could be affected due to the lower output of corn. So there are some risks, and I would say it's in some way we need to respect also the current situation, and if we need to draw some figures what we may expect for upcoming season. So again, we are more like approaching to the averages. If last year we had those 842 million tons of wheat, record high output, excellent weather, except maybe our region, the rest of the world just experienced very good season. And now, if we need to like predict what we may expect for upcoming season, I think we will be more approaching to the averages. To the averages, meaning to the average yields. So if for Europe, it could be a bit lower output. In US, a little bit lower output for time being. In Russia, those 85, 88 million tons are like in the forecast. But as I say, Australia could be affected. And if instead of 40, we would see like 20. Now in my forecast, I have 82, 5 million tons lower output. It could push market higher. This is also could be one of the consequences why the exchange is going up. And I would say as a result, the funds are like following the patterns. Since late of autumn, we closed extreme record high those short positions when we are betting that the price may drop. Now we turn even to the long positions in very short period. Pretty lucky, I would say. Triggers, as I would say, main trigger, as I showed earlier, it's the little bit increase of the demand. We also witnessed this, and we just we need to follow, and we start to buy contracts. Now I think we have some big pool of those arguments why the funds would sit on those long positions. As I say, we are moving towards a very sensitive spring period, when in some extent we could have some weather issues. This El Nino likely will pop up on the exchange, on the market, and then those funds for sure will respect this pattern, and also demand. Demand is under the question, because if we had this conflict, may destroy the demand side. So then all those positive things what is happening in exchange could be like destroyed.
the funds expect that price will go up.
Yeah.
So they are betting, they are putting money on a scenario that the price will go up. And currently, basically, this is important to understand that this is the direction trend.
We turn to those long positions in small scale for time being, but as I say, there are some arguments which still may force them to keep those positions, because just all the geopolitics risk we need to hedge, and as a result, potentially we can keep as long as it lasts. And of course, we need still at some stage also to respect fundamentals. And as I say, respect fundamentals, we need to keep in mind and don't forget that we have big carryover from previous season. And demand, tradable volumes could be also in some extent to some risk, because all the Turkish governments, Egypt, the core buyers are now trying to find some solutions where to find the money and how to finance all those commodity purchases.
And often when we talk with our customers, we talk about these funds as speculations, as let's say, something bad. But from my perspective, it's not good or bad. It's basically they summarize the current mood of fundamentals and how situation might develop. So basically, it's, I think, very good factor which follow up to see that where the market is moving.
We likely don't have clue how to do and how to grow grains, but for sure we are following the fundamentals and we know what to follow. And we are still big force in the market because we are still exposed to the big finance capabilities, and we can push market to one on another side. Also one topic, also one of the elements is euro-dollar. So this is very tricky to say where we're gonna move because again, very related with the current conflict situation. If this conflict may continue for a prolonged period, the inflation could spike very fastly. We already witnessed this month in European figures, in US figures. So this is very a clear pattern, and then it could lead to some kind of replication what we have seen during the COVID times, when the euro-dollar moved to this 105 or 102 levels. But this is, I would say, more like extreme. The core scenario, still nobody is interested to continue this war, even with the current situation when US don't have the way how to get out of it, because we want still to keep the good face, how to say. But if still this situation will be in some way will be resolved, then this rate euro-dollar likely again will be retraced backwards to closer to 120. What we are observing, to be honest, in the market.
And for our farmers, for our grain growers, it's a negative effect. Because we losing as a maybe you can a bit describe and give this insight of the trades as the trades happening in US dollars, how it affects our grain growers.
So the all commodity trade is going in dollars, and once our euro is getting more value, gaining the value against US dollar, so we're losing competitiveness, because we are just making our economy in euros, buying in US dollars, selling in US dollars, so we're getting the revenues in US dollars, which at the end of the day means less euro. So this is clear effect, but I wouldn't focus too much on euro-dollar, because the core movement, the main movement, is already appeared last year. I mean, we are kind of now trading 117. Likely, again, if all goes okay with this conflict, we may move to 120 somewhere. It's not a big impact. We're talking about 2.5% increase, which is, again, in some way could be significant, but not like there are no similarities with the last year when we moved from 105 to 120, when it's like we lost like 15% of the purchasing power revenues, revenues like increase.
And how you see, Marius, from fundamentals, what we covered in this discussion today, for which our farmers should focus in a upcoming next 2-3 months, which is the main?
In short term, we still need to follow the geopolitics. still we will trade until the conflict will not be resolved. We will trade geopolitics, meaning again the situation is more escalated. The market crude oil price is going up. The other commodity prices are following. If we're going to some kind of resolving the situation, again it will be some setbacks on the price, meaning that we will be closer to the levels where we start this conflict. And like last year, after this very short conflict, the situation cooled off, and the price retraced backwards. Later, I would say, when again we are moving towards this very sensitive spring period, like May, it's very close, to be honest, in 1 month. May, June, it always reflects on what is the situation on the fields. And usually, as I always say, 9 out of 10 seasons we have some issues. And very short period, very short price spikes, it may appear on the market due to all those headlines that, I don't know, in Russia it's too dry or whatever. Better not here, better, as I always say, somewhere else. No. So this is also the period which should be followed and tracked. Later, if we're moving towards closer to the harvest, then the fundamentals will speak. And when I say fundamentals will speak, it depends. We still, as I say, we still have big carryover from previous season, which should be eaten in for some certain period. So no support for the price. If all okay with the crop, again, it will be another additional pressure on the prices. And demand behavior, as I say, until now we witnessed very nice kind of pattern when it's increasing. It was like the core for this price move up. And if it will be destroyed, we will have very, very bad hangover, I would say. But
what I hear from you, it's the main factor now which works for price increase. It's geopolitics. Yeah.
Short term with geopolitics, we need still to follow. Yeah. And what I also want to say that in the long term, still fundamentals will be the core. And if we don't have any severe weather issues, likely we would see quite, as I say, some replication on the prices, and it may lead to the lower prices.
And the insight observation from my side, what I also want to ask you, basically, yes, we see the exchange went up, but also the fuel prices went up, the fertilizer prices went up, and basically when we have a discussion with grain growers, they say that current exchange, it can't cover the self cost of my production. Yeah, and here it's a very difficult situation. I'm saying that we need to split season 26 is what we expect to harvest in upcoming months. Yeah, and the season 27 what we'll seed in August. And if we talk for season 26, what we expect to harvest, maybe let's talk very shortly about the strategy, how you see how to fix the prices, or how to what the tools to use to make to keep the profit, or at least to protect the profit.
Again, depends on the farmer where is this level where he starts getting with the profit. But if we speak mainly about the grains and how to ensure the maximum revenues, let's say so I would say still looking at the fundamental perspective, very hardly to expect some very sharp spikes on the price. The trend is moderate upwards with this sensitivity and the short shock from geopolitics, which is currently occurred in the market. And if you would ask me 1 month ago what was my prediction on the motif, I would say 225, what we now recently had. So I don't see much more on the price from fundamental perspective. So if just how to play out and how to maximize still those revenues, I would say still it's the flat prices, the prices at which we are trading the grains, more or less the same before this conflict or right now, meaning that the exchange increased, premiums has dropped. So I would say now it's the good moment to price the motif. wait for some drops of motif to then to fix the premium and to play it with both those parts, because the flat price itself, it's more or less the same like before crisis, because as I say, the flat prices at which we are doing the trades on the physical market is more or less the same. So it's like some geopolitical premium on the exchange, which again, you shouldn't make all in, but some parts still should be locked, and later wait for some resolutions and the premium increase, I would say. If the situation is getting even more severe, again, if you haven't done all in, you still have another opportunity to fix something extra. I would say, again, it's very hard to predict, but I would say the harvest time is the worst time when you're the price in the greens. So you need to, especially in this PP season when we had this geopolitical premium in the market, you don't need to wait a quite long time to see those 2225 on the exchange. We just recently had
Thank you for conversation, and our grain growers, our customers now can see you, the person who makes the grain market reports, what we also publishing every second week, and this is important that how the grain price are building up, and in today's conversation you gave us the insight for that, so thank you very much, and let's keep in touch.
Thank you for invitation. Thank you for discussion. I hope it was fruitful for all your audience.
Very good. Thank you, Marius.
Thank you.